Welcome to The Explainer. Today, we're diving headfirst into Synopsys. These guys are the electronic design automation powerhouse sitting right at the beating heart of the AI semiconductor boom. If you've been racking your brain trying to figure out how to play the AI wave beyond just buying more NVIDIA, well, you absolutely need to understand what's happening here. We're unpacking a wild situation today. Synopsys just dropped a massive earnings report, yet their stock completely pulled back to a major historical support level. Is this a screaming buying opportunity or a huge red flag? Let's break down the numbers, unpack their AI strategy, and map out the exact technical levels you need to be watching. Okay, here is our roadmap for today. We'll kick things off with the paradox, then look at their Q3 blockbuster, uncover the catch, dive into the Agentic AI catalyst, map out the technical support battleground, and finally, wrap up with the bottom line. Let's jump right into part one, the paradox, a massive earnings beat versus a baffling stock drop. So, to really peel back the layers of this financial mystery, we have to confront the immediate contradiction. I mean, how exactly does a company post 42% top-line revenue growth, totally beat estimates, raise their future guidance, and still watch their stock plummet over 21% in just 3 months? It's wild, right? Well, it's a classic case of buy the rumor, sell the news. Expectations for Synopsys were already through the roof. And as you'll see in a minute, investors started looking way past those flashy headline numbers. They started hyper-focusing on integration risks, debt levels, and asking themselves, wait, is this underlying growth actually sustainable? Which brings us to part two, the Q3 blockbuster. Let's take a peek beneath the surface. Before we get to the market's concerns, we really need to appreciate the sheer scale of what they're doing right now. Synopsys just printed a massive $2.48 billion in Q3 revenue. That's a 42% jump year over year. It easily crushed the $2.44 billion that analysts had originally modeled. And the profitability? It followed suit beautifully. We saw earnings per share come in at a really strong $3.91, blowing past the consensus estimate of $3.67. So, to be clear, this wasn't just a top-line revenue story. They absolutely delivered on the bottom line, too. Plus, management is practically radiating confidence right now. This wasn't just a backward-looking victory lap. They actually stepped up and raised their full-year guidance for fiscal 2026, projecting revenue to land somewhere between $9.69 and $9.74 billion. Honestly, seeing that kind of forward-looking top-line growth projection at this scale is incredibly impressive. So where exactly is all this growth coming from? Well, the core electronic design automation, or EDA business, is accelerating like crazy. There was a massive 52.7% jump for the design automation segment. Management specifically pointed out that this was fueled by a record quarter for hardware-assisted verification. Basically, these are the absolutely essential tools you need to test and validate those insanely complex AI chips before they're ever physically built. On top of that, we saw an 11% recovery in design IP, which is where they provide pre-designed blocks for companies to license. That recovery is a huge flashing green light that the broader semiconductor ecosystem is really picking up steam. And that perfectly sets up the final major growth driver here, the transformative Ansys acquisition they pulled off about a year ago. Guys, it is severely paying off. The Ansys integration brought in roughly $711 million just this quarter. Management is already ahead of schedule on their cost synergies, and they've just launched Multiphysics Fusion, which brilliantly combines Synopsys' chip design tools with Ansys simulation tech. The big takeaway here? Heavyweights like NVIDIA, Cisco, MediaTek, and Samsung are already stepping up and validating these solutions for their most complex AI and high-performance computing chips. All right, now for part three, the catch, organic growth. This is where we validate those underlying investor fears. Because remember that 21% stock drop we talked about earlier? Well, here's the stark reality of the situation. Yes, you have that incredible 42% headline revenue growth. But if you take the Ansys acquisition out of the equation entirely, their legacy organic core growth was only in the low single digits. Ouch. This data point right here totally validates a major fear floating around Wall Street. Are these older legacy EDA tools failing to keep up while AI native tools evolve at lightning speed? So how are they fixing this? Let's look at part four, the Agentic AI catalyst, and unpack their long-term strategy. Management's answer to those organic growth fears is a really fascinating multi-layered strategy. They're basically arguing that AI isn't going to replace their value, it's going to exponentially increase it. Let's trace how this builds over time. In phase one, looking back a bit, they started with reinforcement learning through tools like DSO.ai, which is already successfully optimized over 700 chip tapeouts. Pretty solid. Moving into phase 2, which is where we are today, they're using generative AI and large language models to heavily accelerate engineering workflows, things like RTL code creation. But the real game changer is phase 3, their future focus on Agentic AI. They are actively developing AgentEngineer technology that is specifically designed to fully automate complex engineering tasks completely autonomously. And look, if you're sitting there worrying that AI might just bypass their tools entirely, the CEO addressed this exact fear head-on during their latest call. He flat out stated, "I am not worried at all that at some point that model can do the end-to-end without our participation." The core narrative here is that AI chip complexity is becoming so staggering that human engineers literally cannot keep up with advanced software tools to help them. And that allows Synopsys to capture immense value through massive software licensing. Now, let's pivot to part 5, the technical support battleground, where we map out the historical price floor. Having peeled back the fundamentals and the strategy, we really need to look at the technical blueprint. It is fascinating how beautifully the recent post-earnings close of around $410 sits perfectly within this historically rock-solid support zone of $377.98 to $417.76. This isn't just some random price band on a chart. This exact zone has acted as a technical floor and bounced 5 separate times in the past. And the average peak gain after those historical bounces? An incredible 42%. With a 52-week low sitting just below at 366, this current price level is an absolute battleground. The technicals are offering up a very clear, very tempting potential setup, but the fundamentals are going to have to actually confirm it. Which brings us to our final section, part 6, the bottom line and our actionable takeaways. So what exactly needs to happen to confirm this setup moving forward? If you're watching this stock closely, there are 2 crucial things you need to keep your eye on. First up, the IP business recovery. Management firmly committed to sequential growth in the design IP segment for the rest of the year. If that falters, that historical support floor we just talked about could easily break. Second, the whole buy the dip narrative relies 100% on the health of the underlying business. We're talking strong cash flow, solid guidance, and maintaining their market position. The next major catalyst on the horizon is their upcoming Investor Day, where we are fully expecting a massive deep dive detailing the true financial impact of this new agentic AI. Synopsys is clearly positioning itself as a high-conviction play on the entire AI value chain. With the stock sitting squarely in this critical technical battleground, the ultimate question you have to ask yourself is this: will history repeat itself? Will Synopsys bounce off this floor and truly own the design tools for the future of computing? It's an absolutely fascinating setup, and for sure one you need to keep on your radar. Thanks so much for joining me on this explainer, and keep learning.